What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did see a mixed bag with the S&P 500 and the Nasdaq 100 declining while the Russell 2000 and the Dow Jones are advancing. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did decline 0.29%, but we did get the third day in a row closing back over the 50 EMA. And we do have price action back over the 5 EMA as well. The 5 EMA is also crossing back over our 50 EMA, but we still do have this downward resistance trend line that we do need to break out above. Remember, we're in a downtrend until we're not, and if you switch this over to a 1 hour chart, we are still forming a potential lower high on the 1 hour chart. So right now you can see in the smaller term trend, we are starting to form higher highs and higher lows, but we still do need to break out of this longer downtrend that we still have been in since we started declining in the beginning of September. So typically stock market corrections are long and drawn out, and they can last at least 4 to 6 weeks, and we're now getting very close to that 4th week. So it is possible the stock market correction is either ending and that was the only pullback we're going to get, or we're about to see that next leg lower. So look for this resistance trendline breakout, and that level is right around 443.5. Back over on the daily chart, you can see that we are holding up above the 50 EMA, so there is that strong support level at 441. As long as SPY is holding above 441, the bulls are going to start taking back over, and we will see bullish momentum yet again. We'll more than likely see the price action holding up above support and breaking out, and then we will need to break back above 446. So the support level to hold for the bulls is 441, and the resistance level to break will be 446, and then we could see the full bull trend, and we could go to brand new all-time highs yet again. However, if the bears can hold SPY below this resistance trendline and close below 441, we could revisit 436 and 432 yet again. And if the bears can break those support levels, we will very likely see 425. So below 432, you're looking for 425, and above 441, you're looking for a resistance breakout level around 446. So the bulls need to keep the price action above 441, and the bears need to keep the price action below 444. Right now, I am the most neutral you can possibly get on this market, and I don't have a strong directional bias in either direction because I don't see anything in the chart that tells me we are absolutely going higher, and I don't see anything in the chart that tells me we absolutely have to go lower. Right now, I think you're much better off just being patient and waiting for a decisive breakout in either direction, and then you'll know exactly where the market is heading. If you want to front run your position, know those critical levels at 441 and 444. On the Nasdaq 100 triple Qs, we were down 0.8% today, and we do see the triple Qs closing back over the 50 EMA for the 4th day in a row, but we are still seeing the price action closing below the 5 EMA, and the 5 EMA is negatively sloping. So on the triple Qs, the critical support level to hold above will be right around 369. Below 369, we're very likely coming back to 365, and below 365, we could break down and come all the way back down to the 360 support. Below 360, your critical support level is 354, but as long as the bulls are holding the triple Qs above 369, we could make another attempt to break out of this resistance downtrend, which is right around $372. So above 372, look for resistance right around 376, and above 376, the triple Qs will be looking bullish yet again. So those are your critical levels on the triple Qs, and treat it just like I explained on SPY. Know your critical breakdown below 369 and your bullish breakout is above 372. Anything between those two levels is neutral, and we don't know exactly which direction this market's going to go until we either break above 372, which is bullish, or break below 369, which tells us we could retest the support levels below. On the Dow Jones, we were up today, going up 0.21% and closing just below that negatively sloping 20 simple moving average, and we do see a lot of selling pressure above that 20 simple moving average. So is this bullish? Only time will tell, because we did get a price action close back above the 50 EMA, but we did see a lot of selling above this level. So this is a bullish price action breakout, but this is not necessarily a bullish looking candle because we do see a lot of selling pressure above resistance. Now, if the Dow Jones can stay above 348, it could build up some bullish momentum, and we could even regain the full bull trend in just a few more days. If we can see the Dow Jones breaking back above 351, we could start getting that bull trend even quicker, and we could see the Dow Jones attempting to break out to brand new all-time highs above 355, which means we could start heading back up to 360. If we see the Dow breaking below 348, look for that support level down here at 341 and 339. On the Russell 2000, we saw the most bullish price action today of all, going up 1.52%, and we did see a very bullish candle that did get rejected at that resistance level at 227. We're back above all the moving averages on the price action, and we did get that bullish close above 224. So if the Russell 2000 can stay above 224, we are very close to having that full bull trend. We just need that 13 EMA to cross back above our 20 simple moving average, and we will see the Russell 2000 building up some bullish momentum. We're going up on nice volume, and we're starting to build up some bullish trending. So all we need to see the Russell 2000 do is break above 227 and then close above 229, and we should have the full bull trend, and we could see the Russell finally attempting to make a breakout. We can't just assume the Russell's going to break out because it's attempted to break out multiple times and it always gets rejected. So we could still be trading sideways and it could still be a volatile chop. But if we do break above 229 and start closing above 229, we could regain the full bull trend and we could see the Russell 2000 trying to go to a brand new all-time high. If we see the Russell 2000 breaking back below 224 and closing below 222, it's very likely this was all just a fake out and a bull trap before another leg lower. If we break below 222, look for that support level at 219 and 215. On the ARKK ETF, we were basically flat today, going down 0.09%, and we did have a very volatile day, at one point trading below our support level at 115.5, but we did see buyers of the dip. ARKK is still looking like it's going through this downward trend, and it's very close to having the bear trend if that 20 simple moving average crosses below the 50 EMA. The ARKK bulls need to get a price action close above 120 to prevent this bear trend from building up momentum, which could send ARKK all the way back down below 112 towards 109 and 106. So look for strong support at 115.5, 113.8, and 112.7. The upside resistance to pay attention to will be 120 and 123. On the VIX, we were up 5.81% today, and we do see the VIX closing back above the 50 EMA, but we did lose the full bull trend. We're back above that critical level at 18.2, so we don't have any clear direction in the VIX of whether or not we're going to new all-time highs or we're about to see another volatile wave of selling. If we see the VIX getting back above 20 and breaking out yet again, look for a deeper stock market correction as we see the correction prolonging and going into the next month of October. If we see the VIX breaking below 18.2 and heading back down to our support trend line right around 16, we could see that bullish breakout and a brand new all-time high going into the rest of the year. So look for the VIX above 20 for more downside and the VIX below 18.2 for a potential bullish breakout and a lot more upside. On Bitcoin, we're currently down about 0.9% and we see Bitcoin still holding around the support level at 43,000. We currently see price action getting rejected around our 13 EMA and trading below a negatively sloping 5 EMA, so there's definitely some bearish momentum building up in Bitcoin. We're very close to having our 20 simple moving average crossing below the 50 EMA, which does mean Bitcoin will have the full bear trend on the daily chart. So the Bitcoin bulls need to get the price action back above 45,000 to prevent this bear trend from building up momentum. If we see Bitcoin losing support at 40,500, we could very likely come back down to the support level at 37,500. Below that, look for strong support at 30,000, and that level should hold up as support if we do get down that low. However, Bitcoin is still holding around 43,000, so we can't count the bulls out yet, but the bulls need to prove themselves and get the price action back above 45,000. We need to get another daily high above 48,400, and then we could attempt to break out, regain the bull trend, and possibly start heading up to the 53,000 range. So right now, Bitcoin is looking weaker than it is strong, and the bears could continue to drive this lower if the bulls don't get a decisive break back above 45,000. On Amazon stock, we were down 0.58% today, and we see Amazon still closing above that support level at 3,400. We are very close to knowing if Amazon is going to break out to the bull side or break down to the bear side, and we can see the Bollinger Bands are squeezing. We have two gaps to fill above at 34.52 and 35.80, but there's no guarantee that we have to fill those gaps now, so don't just assume those gaps have to be filled. The most likely scenario is that we will reattempt to close that gap at 35.52, and if we get rejected from that area and close below support at 3,400, that would be a bearish rejection, and it could mean we're going for another leg lower. If the bulls can close that gap and break above that resistance at 34.52, that would be a bullish breakout and we could regain the full bull trend and then start marching up towards the next resistance at 3,500 and 35.52 and potentially close the gap at 35.80. If Amazon closes below 3,400, continue to watch that strong support level at 33.11 And if the bears can break that support level, watch for the next support levels at 31.85 and 31.36. There's no trend for the bears or the bulls, so the price action at this critical support level is going to tell us everything we need to know on Amazon stock. On Tesla stock, we were up 2.19% today, and we do see Tesla getting to that price target at $800. Remember, Tesla still has the full bull trend, and we do have the bullish price action, and now we're breaking out above 765 and getting to that next price target at 800. If we can break $800, look for strong resistance at 825. Otherwise, look for a potential retest of support at 765 or right around $750, which is our resistance trendline breakout level. Right now, Tesla has a very strong bull trend, and the price action is currently closing above the upper Bollinger Band, so it is possible we get a little bit of a cool down before we go any higher. You can buy the dip as long as you have the bull trend, and the most critical support level to continue to watch is down here at 732. The 50 EMA is now at 719, and we continue to see Tesla forming higher highs and higher lows, so Tesla is still looking very bullish at this time. If you see Tesla closing below 714, then you'll know it's rolling over. Otherwise, continue to look for higher prices. And if we can break out above the 820s, we could see brand new all-time highs this year, which would be a very bullish development for Tesla stock. On Apple, we were down 1.05% today, and we continue to see Apple looking very weak with the price action below all the moving averages, and we are building up some bearish momentum. Remember, Apple has support at 145 and 142, and if we lose the support level at 142, it's very likely we're closing the gap at 137. We need to get a bullish breakout and close above 147, and then we need to see the price action getting back above about 150 to potentially build up another bullish trend to make another attempt at a brand new all-time high. As long as we're below 150, it looks like Apple has downward momentum, and we are forming lower lows and lower highs. Apple's price action needs to stay above 142 to prevent itself from breaking down and going into a downtrend. Watch that strong support, and the strong resistance will be right around 147. On the financial sector, we were up 1.36% today, and we do see the financials having a very impulsive and strong rally off of those lows when it did look like the financial sector was starting to break down. So this is a very bullish rally, and it could send the financial sector back into a bull market if the price action can stay above this 20 simple moving average. The industrial sector was up 0.1% today, and we still see a very weak looking industrial sector, but we could be attempting to break back above the 50 EMA in the near future. If we can't break above the 50 EMA, look for a continuation of the downtrend as we go down for another leg lower. On the healthcare sector, we were down 1.42% today, and we see the healthcare sector closing below the 50 EMA and the rest of the moving averages yet again. We're definitely building up some bearish momentum, and we could be coming down much lower if we can't break back above that 50 EMA. The energy sector was up 3.56% today, and again we see a very impulsive rally just like we see in the financial sector. If the energy sector can regain the bull trend, we could see another bull market in the energy sector that could bring it to brand new all-time highs. Look for the price action to stay above the 50 EMA as we regain the full bull trend. So jumping back over the S&P 500, you can definitely see there is a mixed bag in this market. We have some sectors that are looking very strong and bouncing impulsively, while we have other sectors that are still looking weak and they do look like they're rolling over. This could be another case of sector rotation as we go into the next quarter to finish out the year, but this still is a downtrend until it's not. So be cautious and don't get overly bullish. If we lose these critical support levels, look for that next leg lower, and then we possibly could be seeing the stock market correction coming to a close. Right now, we could be seeing the correction ending, and it could have just been a mild pullback, or we could just be getting that bounce before we get that next leg lower. So watch these levels because there's nothing clear in the market right now, and you really need to be objective and watch your critical resistance and your critical support and see which one of those levels will break first. On a break of resistance, you can get a lot more bullish, and on a break of support, you need to continue to be more cautious. Let the price action do all the talking, and if you're not sure what to do in a volatile market, you're much better off just doing nothing at all until there's more clarity in the direction. Also, don't forget that I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I'm currently running a 50% off promotion code for your first month. You get all of your buy and sell alerts directly via email and text message, and you can find out all of the details and how to join BANC Trade Alerts by clicking on the links in the description of the video. I also have the Stocks channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.